gold has outperformed the stock market since the new millennium. And you would never know that based on the coverage it gets and what people speak about and all. And, to me, that's just more reasons to keep focusing now. The biggest parties within that group, Russia and China in particular, have been huge buyers of gold. And they're not buying it for a trade. They're not buying it for speculation. They're buying it because someday, somehow, in some form, gold will be used as part of their medium on how they're going to do business with one another. Central bank buying and related to BRICS is the number one bullish thing for gold.
Gold has outperformed both stocks and bonds since the turn of the century. Gold was among the best performing assets of 2023. According to an analysis by the World Gold Council, gold outperformed emerging market stocks, U.S. bonds, the U.S. dollar, global treasuries, and commodities in general. Peter Grandich of Peter Grandich & Company highlights gold's remarkable outperformance over the stock market since the new millennium. Gold also outperformed stocks in 2022. While front-month futures finished the year marginally lower, the losses were much more modest than the 19.4% drop in the S&P 500, a figure that excludes dividends. Gold also outperformed stocks in 2020, when gold futures rose 24.4%, compared with the S&P 500's 16.3% gain. Peter also attributes the continued strength of gold to central bank acquisitions, with a specific emphasis on the BRICS nations, notably Russia and China. The latest data shows that BRICS member China is on a gold-buying spree, as it added 225 tons of gold to its reserves in 2023 alone. China stockpiled 225 tons of gold worth a staggering $13.2 billion last year. Apart from China, the other BRICS countries, India, Russia, and Brazil, are steadily purchasing gold. BRICS is officially the largest buyer of gold in 2023, outperforming every other country, reported the World Gold Council. Meanwhile, Peter believes that BRICS countries buy gold not just for trade or speculation, but as a potential future alternative to the U.S. dollar. Freezing a country's dollar holdings, like Russia's, could speed up a shift away from the U.S. dollar in trade or investment by nations with different geopolitical interests, like China or the Gulf states. Now we present the clips of Peter Grandich's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
2 years ago, when we were ending 2021, I made a major decision for myself and anybody who wanted to listen. I said that we were entering the worst ever economic, social, and political era, which has gotten a lot worse, and we can talk about that in a little bit. So I didn't want to own any general equities that weren't related to natural resources. And instead, I actually suggested to people to own physical gold. I don't sell it. That's your business. I don't have any relationship with you. I don't get any pay by anybody other or anything like that. But I said that physical bullion was a worthy, better choice than equities, which was kind of unusual for people to hear. 2 years later, I want you to know gold is still outperforming the stock market over that period by a couple percent point. Now, everybody sees last year's rally, but they don't realize how much was lost the year before. And remember, when you lose 25% in 1 year, you have to almost go up double to make it back. And as much as the equity market is near its, like you said, all-time high. And here's the other surprise, and this is singing to the choir, but you're deserving to be sung to in this regard. If we went out now and talked to any 100 licensed financial advisors in any spectrum in any state and asked them this simple question, what since the new millennium has performed better, stocks or gold? 98 or 99 and would tell you the stock market, because that's what it seems like. It's going up and up. But the bottom line is gold has outperformed the stock market since the new millennium. And you would never know that based on the coverage it gets and what people speak about and all. And, to me, that's just more reasons to keep focusing now. Of course, if the day ever comes, I don't know if it ever can, because the financial community treats gold like kryptonite. It goes against the principles of financial assets and that, et cetera. But if we ever got to the point where we're going to parties and getting our haircuts and guys are telling us to buy gold, even then guys like you might want to think about, hey, maybe it's time to pull it in. But we're so far away from that, and yet gold has for almost 25 years outperformed what everybody thinks has been the best investment. The continuing Singer's main driver is central bank buy-in, and part of that is because of what is happening, which still most on Wall Street pay no heed to and are going to pay a terrible price because of it, to understand what the formation of the BRIC nations is leading to. You know, it was an afterthought, then it was just 5. Okay, now it's 10, maybe be 20. And I hear people scoff and say, it's these countries and nobody cares about them and so forth and so on. How wrong that is. And yet, two of the biggest parties within that group, Russia and China in particular, have been huge buyers of gold. And they're not buying it for a trade. They're not buying it for speculation. They're buying it because someday, somehow, in some form, gold will be used as part of their medium on how they're going to do business with one another. It may just be something regional, just among themselves, or maybe someday it will compete with or replace the U.S. dollar. That isn't any day soon, but that's what we're working to. And as we work through this, they continue to be aggressive buyers. So I think central bank buying and related to BRICS is the number one bullish thing for gold. The second thing is, and I think it's interesting, and maybe you don't like seeing that, but I think it will be important to you, is that people are willing to go into Costco and Walmarts and buy gold. And to think about that, even though it's not large sums of money, and basically they're almost using it as a loss leader because they're not, trying to profit from it. They're really just trying to found a way to attract people into business. The very fact that Americans now are willing to buy physical, understand this, the culture in Asia, it's a way of life of owning gold. Americans have no understanding unless, they go back 60, 70 years when we had the gold standard and all. So it was kind of interesting to see that there'd be such demand for that from retail people who basically aren't following the markets like you and I do. That's a plus. But again, the overriding factor is the continuing purchasing of physical bullion by central banks. And there doesn't seem to be any near-term reason to think that's going to change.
Peter Grandich expects gold to exceed $2,100 and potentially provide silver with its moment in the spotlight. When precious metals rallied in 2020, on the back of lockdowns, interest rates slashed to zero, QE, and general market fear, silver's gain was double that of gold. The price ran up 43% from January to December 2020, compared to gold's mere 20.8% rise. Earlier in the year, as gold punched above $2,000 an ounce, a 39% gain, silver rallied to nearly $30 an ounce, a 147% increase. He foresees a bullish gold trend despite rising interest rates, attributing it to the escalating debt crisis. Rachel Mills, Lear Capital Global Finance Research Specialist, estimates a $3,200 price for gold by using the U.S. National Debt Clock's prediction that the national debt will reach more than $45 trillion by 2027. As noted in the report, if gold prices continue to outpace debt by 1.6 times, gold prices could reach $3,200 an ounce, representing a 60% increase from its current value. Furthermore, he emphasizes gold as a key preservation investment for safeguarding wealth in the current economic climate. Let's get back to the interview.
When this cycle, when people realize how bad we are financially, socially, and politically, and what's happening around the world with the BRICS and other places, the dollar's continuing losing its prestige will accelerate. And that last resistance of how some of the traders, particularly here in the CRIMEX, the COMEX, still use that strategy, will dissipate and disappear. And that's what's going to all coincide with gold getting above 2,100. So it's above every little top that everybody looks at. And once it's in that new world, so to speak, the momentum players and all the other things that happen when things are trading at levels they never traded it before will drive a very fast move and finally give silver a reason to have its own day in the sun, because it always still needs gold to break out first before silver can then follow up. And then at times during that largest part of the run, maybe even lead for a little while. Not too long ago, we were in the 1600s and interest rates were substantially lower than they are now. goes nicely over 2,000, remains above 2,000, which is a bullish thing for 2024. And yet interest rates went up 400%. So that argument of when rates go up, gold always goes down has been proven wrong more than once. Now, I'm not in the camp that thinks there's going to be a lot of interest rate cuts. They may have stopped, at least for now, or for the cycle, raising substantially. But I don't believe there's going to be a lot of interest rate cuts because the real inflation rate, and the Fed knows what the real inflation rate is because all they have to go back to is use how they used to calculate it in 1980 and 1990 before they changed it and massaged it so it would always come out lower than it really is. They know what the real number is. And quite frankly, I don't think they can get away with flooding the market anymore because here's why, and this is the other bullish factor for gold. The debt crisis has finally become what people have talked about for years, off in the distance, out there someday, maybe we should worry about it for our children or our grandchildren, is now front and center. We went up more in our debt in 4 years than we did the first 200 and something years. We went up $2 trillion in a year. Don't focus so much on capital appreciation. Focus a lot on capital preservation. That's why the products that you're involved with fit that mold. Gold should always be first a preservation investment. There are points, and then there's other ways through mining shares and things like that to look for appreciation. But preservation and protection are more of a viable reason for me, at least, to own gold. And never has that reason been more acute than it is right now.
Analysts are expecting gold to outperform in 2024. JP Morgan forecasts gold and silver to outshine the rest of the metal sector, citing the Fed cutting cycle and falling U.S. real yields as the key drivers of gold prices in 2024 and anticipating the precious metal to reach an average of $2,175 by the fourth quarter. How do you foresee gold's future role in preserving wealth, given its consistent outperformance against the stock market? Share your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.